Hey, good morning. Let's go over today's trade plan. So we saw in the overnight session that ES broke out above the highs from the last couple of days, and that resulted in some follow through all the way up to 2041. But the overall context still makes it a risky buy at these higher prices. So, if you're trading the actual breakout, then it's perfectly okay because it's a breakout from a 2-day balance. But at this point, the market has already consolidated up here, and we're going to be using 30 half to 32 half as the micro bull bear zone. And if we actually continue to hold above it and continue to balance, then ES can break further and test the 47 half to 49 half resistance zone, fill the gap at 46 quarter, and sellers can still be active on first test of initial resistance. Or the other possibility is that ES actually fails to even take out pre-market resistance, and we break 30 half to 32 half, and then just go down to the breakout area, 2175 to 2375. That is the near-term inflection point below the bull bear zone, and this is still aggressive support, and it would really only hold if the buy side is still being quite aggressive. Given the bigger picture, there is still risk on the buy side that this entire move could potentially reverse, or at least go down to 13 half to 15 half, fill the gap at 19 half, test yesterday's VPOC. The main inflection point on the downside is really down here, 13 half to 15 half. This is the aggressive spot if the breakout's going to hold, and if it does, then it tells you that the buy side is still fairly dominant, and perhaps we are starting to put in a bigger turnaround. But the bigger inflection point is 13 half to 15 half. That is really the deciding factor on where we go, bigger picture. If we continue to hold above it, then we could just consolidate and slowly make our way back up. If we break and hold below it, then it would tell you that the sellers are being more dominant again, and that could lead to some lower prices. But the other thing to keep in mind is that the econ calendar is fairly empty today. Jobless claims are already out of the way. There's really no major catalyst to drive the market big to the upside at this point. At the same time, there's also no catalyst to drive it big on the downside. But given the price structure, the risk is with the buyers up here. Again, not to say that we can't go a bit higher, but the risk is on the buy side, given the larger sell-off that we saw over the last 5 or 6 days. And the next major catalyst is really tomorrow, the employment report in pre-market. That's really the next big catalyst. So there may not be a whole lot of upside potential left on the day time frame today, given that the market could just kind of wait on the employment report at this point. There may not be too much more left, and even if we get upside moves, I think they will be met with responsive sellers first time around. And we've seen that even in the overnight session. The first test of that 36-38 area, it poked above it by a bit, but it resulted in a pullback towards 30-31. The push up to 41, we had a resistance level at 40 half. That ended up providing rotation, and the market started balancing. So even as the market heads higher, we are seeing some pretty decent rejections on first test of resistance. So it does tell you that the sellers are still active in this market, and at the same time, it tells you that if you are trading from the long side, let's say from a overnight balance breakout or an intraday setup that supports the idea, you don't want to overstay on the long side. When it hits your target, take the profit and move on. So, for example, let's say if the market continues to balance here near the highs and then sets up a breakout above 38 half to 40 half, and you trade that breakout, well, you would still want to be out by 46 quarter, or at the most by 47 half to 49 half, because that move could be short-lived, and it doesn't have to be a sustained upside move that just continues to trend. The way this market is setting up right now, we can still get sellers on first test of pretty much every resistance zone, even if the market heads back up. But overall, I think the risk is more on the buy side up here at these higher prices, we could quite easily break below 30.5 to 32.5 and test the overnight breakout at 21.75 to 23.75, go down, fill the gap, test the VPOC, and then even test 13.5 to 15.5. That would not be that big of a move, and given the bigger picture, it's very, very possible on the day time frame today. So, we're going to be cautious on any long setups up here. If the market breaks the micro bull bear zone or just, off the open, sets up a short where it seems like it is very likely to break, or if the other markets, break lower, then we will look to trade it from the short side. And if we break out above 38.5 to 40.5, the 47.5 to 49.5 would still be a valid short setup on first test. Overall, not a whole lot going on the econ calendars. Just keep that in mind. The main report is really tomorrow. So those are really the major ideas heading into the open. Let's see how the buy side holds up at 30.5 to 32.5. Let's keep an eye on 38.5. That'll give us a good idea on which way this market could be going, and we'll take it from there.